Mitchell, I'm curious what you're thinking and what you're doing, given what clearly is a downdraft at the moment.
Hey, Andrew, how are you? Good to be on this morning. Yeah, clearly a downdraft. It's actually interesting, though. Look, the Nasdaq's down 14, the S&P's down 9 from the highs. Maybe it'll be more, obviously, this morning. But underneath it, I mean, you've got a lot of people still like hiding in the large cap stocks. Amazon broke last week, but Google, Microsoft, these things really aren't down that much. Apple. But underneath the covers in a lot of like software world and SaaS world, all the software stocks we look at are down on average about 50%, probably more this morning. And I think 40+% of the Nasdaq stocks are down 50. So there's already a tremendous amount of pain in the market, and looks like there's more coming.
So, well, that's the question, though. You said there's more coming. Does that mean that you buy now or you wait because you think there's more coming? Timing, historically, has never been anybody's great strong suit.
Definitely not mine. We're starting to buy. I think in the software world, we're buying 2 buckets of assets. And we run oftentimes with lots of cash, so we're never gonna call the bottom, and we're not fully invested at all right now. But we're buying. There's a business called TransferWise. It trades on the London Stock Exchange. It's a payments business. We were early investors in it. I think we, bought the stock originally at £3 a share, went up to 10 or 11 pounds. We distributed it. We're back buying it at 6. They just reported really good numbers last week. We're also buying really high quality software companies like the ServiceNows, ServiceNows, Datadog, Snowflakes of the world. That's another bucket. I think those are just great businesses that will compound over long periods of time. I also think you can start to look for, there's another segment of software companies that are very cheap, traded at 3 times revenues, 4 times revenues, that have really good gross and net retention. So they're very sticky customers that have just been annihilated. There's hundreds of billions of dollars in capital on the sidelines right now in private equity buyout funds. I think if you see prolonged pricing down here, a lot of these companies will end up getting taken out. Companies
you said there were a couple companies you thought that their stocks were annihilated at 3 times revenue. What companies are you talking about?
There's a company called Sumo Logic that's just been absolutely crushed. Toast is another $10 billion market cap company we really like. Clearly, we're biased. We were early investors in it, but that stock's down probably 60-70% from its highs. It still grows 100+% a year. Obviously, it will decel. Well, next couple of quarters in Toast makes restaurant point of sale systems. It was a very big IPO last year. I can't tell you this quarter or next quarter, with all this Omicron stuff that's going on. I'm sure the numbers will be a bit lumpy, but people are still doing takeout. People are still eating outside. That's a business we really like for the long term. Toast.
What's the chance that the Fed is not as hawkish this week as perhaps the market thinks, and that there's a re-rating?
You got to call Stan Druckenmiller for that. Or some of these other guys. I can tell you if they aren't, these things are going to probably go vertical, I would guess. And it could snap back. Now, look, any guy that is an expert on bear markets, which I'm not, or on bull markets, will tell you that in a bear market, there are very violent rallies on the way. But look, we're talking about raising rates a couple hundred basis points, 200 basis points over the next year or two. This isn't going to end the world, I don't think. And Morgan Stanley had a good piece out recently about software, and every 100 basis points, multiples need to come down, 15% or so, at least for the high growth names. But if you grow really fast, you can earn your way into it. So I think you just got to take advantage of the situation and selectively deploy cash in businesses that are going to be a lot bigger today than in 5 years than they are today. But I do not envy the people that are constantly trading around. And I was just listening to Kramer. I have no clue why these things are selling off in the last 30 minutes. But you just got to use your cash and slowly get into names you really like and for the long term.